Hi, I'm here to take you through the Q4 expectations for ICICI Bank. In fact, it's likely to be a good quarter or a relatively good quarter for ICICI Bank, but the entire focus would be in terms of the management commentary on asset quality and, more importantly, the outlook of the management, especially in the light of the impact of second wave of COVID on both NPAs as well as in terms of the growth outlook ahead. Quickly, in terms of the Q4 expectations, ICICI Bank is likely to report a fairly healthy NII growth of nearly around 15%, with NII at 10,300 crore. Operating profit is likely to rise 19% on the back of NII, some amount of treasury gains, and also operating cost benefits, or rather relatively lower operating costs. Profits are likely to be fairly strong at 4,900 crore, which is a jump of nearly around 300% on a YY basis. This is coming on a very low base of the same quarter last year. NIMs are largely expected to be stable at 3.7%. However, as I said, the entire focus would be on asset quality. So although the provisions are likely to remain high, there are expectations that we may see provisions normalizing slightly in the current quarter. Can it sustain or not, given the impact of the COVID second wave? We will have to see that. Slippages may still remain stable or may rise very slightly on a sequential basis. Loan growth is likely to pick up at nearly around 13 to 14% on a YOY basis, and it is going to be led by housing loans as well as auto loans. Also, the overall business growth momentum is likely to get a good amount of boost on account of the digital push. Deposit growth is likely to be healthy at 19% YOY. Key monitorables would be, of course, the entire commentary in terms of the NPAs, the movement in terms of the stressed assets and downgrades to BBB and below list. In fact, if you look at ICICI Bank, the pro forma GNPAs stood at 5.4%, and the pro forma GNPAs, this was in the last quarter, the pro forma net NPAs in the last quarter stood at 1.26%. And this is something that we should be watching out for. How does the gross NPAs and net NPAs perform in the fourth quarter versus the Q3 pro forma NPA? So hence the pro forma GNPA stood at 5.4% and the pro forma net NPA stood at 1.26% in the last quarter. They also have close to around 9,900 crores worth of aggregate COVID related provisions. Will the bank use the same? That would be the key question. If you look at the stock performance,